Not knowing your trader identity will lose you money guaranteed. And because of this, make sure you apply all the frameworks I'm going to give you in this video, especially the one at the end. Knowing what kind of trader type you are got me from confused and losing a lot to making consistent profits and payouts. In this video, I will guide you through how to discover what trader type you are. To do this, first I will give you the trader recipe framework. Then, using this foundation, I will go over the different trade languages you can speak. And after that, I will show you if you're a scalper, a day trader, or a swing trader. So let's get into it.
Before we dive into the video, let's do a small recap. By now, you should know how to read candlesticks and their respective patterns. You should know what time frames are with the Rule of 3 framework. You should know what to trade on the forex market and in the indices. You should know how TradingView works, what futures are and how to trade them, what leverage is with points, pips, ticks, together with lot size calculation, and of course what a broker is and how to choose yours with the broker checklist, and what a prop firm is and what the advantages are compared to a broker and how you should use them both. In this video, we're first going over the trader recipe, then we're going over the trade languages, about how to choose your own trade language, then we go over the different trader types and about next steps. First, let's talk about the trader recipe. So imagine you're cooking something nice, you're making pancakes for your loved ones, and in those pancakes, you need to have some nice ingredients. And the same we're going to do to determine your trader type. And the first thing you need to determine is in how far you are a fundamental trader and how far you are a technical trader. I think you should be a bit of both. So a fundamental trader focuses on the macroeconomic conditions, so mainly focus on news, and a technical trader mainly focuses on technical. You should be a bit of both. So put a little bit of both in a recipe and you should be good. Some traders are more towards fundamental and some are more towards technical, but you can be both. Then you need to choose a trading language. And the most common trading languages are support and resistance, supply and demand, ICT. We're going to talk about it later. And also, you need to determine your time frame. Are you a scalper? Are you a day trader? Are you a swing trader? Or are you a position trader? And when you put those four together in your trader recipe, you will get a nice trader type. And based on a trader type, you can then grow as a trader. It's all about intentional improvement. So when you know what trader type you are, you can exactly make a roadmap for yourself, what you need to do to become that type of trader. Let's talk about the trade languages. A trade language, just like a regular one, is a way to communicate. And as a trader, it's a way to communicate with price action and the market in general. Very important, there is no good or bad, right or wrong in this decision to choose a certain language, as all of them can make you money while executed consistently. Don't believe the people who say support or resistance is the holy grail. Don't believe people who say ICT is the holy grail. None is the holy grail. Everything works as long as you execute consistently. And the three most used trading languages are support and resistance, supply and demand, and ICT and smart money concepts. One of the three languages you can speak to the market is support and resistance. And you see here in this image how that looks like. Technical analysis use support and resistance to identify price points on a chart where the probabilities favor a past or reversal of a prevailing trend. Support occurs when a downtrend is expected to pass due to a concentration of demand. Resistance occurs when an uptrend is expected to pass temporarily due to a concentration of supply. So you see here, make higher highs, higher lows, higher highs, higher lows. And at some point, support breaks and then we're going lower. Market psychology plays a major role as trader investors remember the past and react to changing conditions to anticipate future market movement. So when we come back to a resistance area, people expect price to just keep that resistance and go lower. When price goes to a support area, people think, okay, the support area, you can go higher from that. Support and resistance areas can be identified on charts using trend lines and moving averages. The second language you can speak is supply and demand. And supply and demand zones are areas on a price chart where the price of an asset tends to stall or reverts. They represent areas where there's a significant concentration of buying or selling pressure, which can impact the direction of price movements. This is a depiction of how that looks like. You have an accumulation on a demand zone and you're trending upwards. They're coming in a supply zone. This looks like support or resistance in some way. Then you're in a supply zone or resistance area, distribution lower. You have the second stage of accumulation, going higher again. And here as well, higher highs, higher lows, higher highs, support, resistance. So again, every language has some overlapping parts with each other, just like a regular language, but it should suit your personality and trading style. A supply zone, there's an excess of sellers causing the price to drop right here. This occurs when supply exceeds demand and traders are willing to sell at a lower price. So there are more sellers than buyers in a certain area, so we go lower. Demand zone is vice versa. There's an excess of buyers causing the price to rise. This occurs when demand exceeds supply and traders are willing to buy at a higher price. That means here are more buyers than sellers. The price goes up. Here are more sellers than buyers, so we go lower. Here again are more buyers and sellers, so we go up again. The third language you can speak is ICT or smart money concepts. Smart money concepts is invented by Richard Wyckoff over 100 years ago, and ICT continues with the SMT concept and gave it its own flavor. They both deal with liquidity, inducement, imbalances, manipulation, premium discount. ICT talks about the algorithm, IBDA, that delivers price, and the big money and banks are using that. Learning ICT basically is learning to trade like the banks. In Wyckoff day, the technology for an algorithm was not available, so it couldn't be that Wyckoff invented that whole algorithm idea. In Wyckoff's day, the technology wasn't available for an algorithm to exist, so Wyckoff started with the smart money concept, and then ICT gave its own flavor, like a little layer on top of that with his ICT concepts. All the ICT concept is free to find on the Inner Circle Trader YouTube channel, and the ICT language is the language I'm speaking myself. So the content you will find created by me is mainly ICT concepts. Here's a depiction of how an ICT setup looks like. In this video, I'm not going into detail into this, but in other content in this channel, you will find many ICT concepts and setups. Then let's talk about choosing your language. And let's go over some ground rules. First of all, there's no right or wrong with any of the languages. Support and resistance, supply and demand, ICT. There are many more, but the three biggest ones we just discussed. Don't believe people who tell you theirs is the almighty truth. A very important ground rule when you're starting out is to choose your language and then stick to it for at least a few months. And this is to avoid strategy hopping. What most people do, they learn a new language. So for example, support and resistance, and they try it for 2 weeks, and then they take 2 or 3 losses in a row, which is very normal for a trader. And then they're like, oh, this doesn't work. I'm going to find something new. And then they find supply and demand or ICT, and then they do the same. They learn it for a few weeks, get a few losses in a row, and they're like, no, this doesn't work. And they go into YouTube, find the next 90% win rate setup, and that strategy hopping goes on and on and on, and it's just a cycle downwards. And you're not learning anything. Also, it should resonate with your personality and preference. Just check them out and you will know when it suits you. When you think this specific language is the way you could look at the market and it makes sense to you, then you have found your language. Feel free to try them out yourself using free tutorials on YouTube. Don't buy a few $1,000 courses, guys. It's not worth it. You could try them out yourself using free tutorials on YouTube. Don't go buy courses who cost you $1,000. Everything, all the basics for all the languages are free to find on YouTube. And the next and final part of the beginner bootcamp, there will be a full beginner guide to ICT, and that's just the language that I'm speaking. So where we didn't go into detail into this, the next part you will see a huge explanation on everything ICT. So when you found your trading language, it's time to look at what type of trader you want to be at the time frames. And you can be a scalper, you can be a day trader, you can be a swing trader, or you can be a position trader. And let's go over all 4 of them to see which one most resonates with you. A scalper is a trading style that focuses on making numerous small trades within short time frames, aiming to profit from small price fluctuations. Scalpers typically hold positions for seconds to minutes and target small gains on each trade, and this style requires a quick decision making, fast execution, and the ability to closely monitor the market. The scalper is the most fast-paced, intense way of trading. Day trading involves opening and closing trades within the same day. Day traders aim to profit from intraday price movements and typically do not hold positions overnight. Most of the time, just a few hours. They use technical analysis, chart patterns, and short-term indicators to identify trading opportunities. And day trading requires a disciplined approach, the ability to manage emotions, and active monitoring of the market throughout the trading day. So where scalping is in and out in a few seconds or maybe a few minutes, day trading is a little longer, 1 hour to like few hours, but intraday, so no overnight positions. So at the end of the trading day, you are out of your position. Then you have swing traders. Swing trading involves holding positions over a few days to several weeks, aiming to capture a short to medium term price swing within an established trend. So you see price going lower, lower, lower. Then you see price reversing to the upside. And then you try to catch that whole move to the upside for a few weeks as a swing trader. Swing traders analyze technical indicators, chart patterns, and market trends to identify entry and exit points. For example, you have that low reversal, you go to the upside, and you have an old high as your target as an exit point. This style requires patience, the ability to analyze the market movements, and a tolerance of holding trades overnight. As a swing trader, you're going to hold your trade for a long time. And that means in that long time, you will see your trade go up, go down, go up, go down, but you need to be able to hold. So you need to have very big patience for that. And then the fourth one is position trading. It's a long-term trading style where traders hold positions over a week, months, or even years. Position traders focus on major trends and aim to capture significant price movements. They rely on fundamental analysis, so macroeconomic factors and long-term trends to make trading decisions. Position trader requires a long-term perspective, strong risk management, and ability to withstand market fluctuations. So position traders are mainly the hedge funds, the big money, who are holding trades for years. I know that the people who are watching this video are not going to be a position trader. You want to be a scalper, day trader, or swing trader. I found this on an Instagram, and I think it's very, very nice to incorporate in this video. What type of trader are you? and the scalper, day trader, and the swing trader. With scalper, you don't have any free time because you're on the market the whole time. You're in lots of stress, your risk is high, your reward is high because you are in and out within a few seconds, within a few minutes. So you're like that surfer dude who catches every wave and just goes. As a day trader, you're just in a boat, rowing. You have some free time during the day. Your stress is okay, your risk is okay, your reward is also okay. Not too big, not too small, just very consistent. And a swing trader has lots of free time because they don't need to look at the market the whole time. They're holding their positions for at least a few days. They have no stress because they're like, okay, yeah, I'm now taking a trade and maybe later this week or next week, I have my take profit or my stop loss. I lose or win. The risk is low, reward is low, but because of that, you are more zen, more chill. And it should resonate with your trader type. Because if you, for example, work a full-time job with lots of responsibilities and lots of calls and you cannot look at the market, then of course you cannot become a scalper because you need to be on the market the whole time. Same if you have a busy job. Day trader can also be quite challenging. Of course, you can take a few days from your working day to focus on the market. Most starter traders should just start with swing trading. Just take a trade, hold it for 1 or 2 days and see if you are right or wrong to train yourself. There's no right or wrong. It should resonate with your personality, with your current situation, and that's totally up to you. You might remember from episode 2 of the bootcamp timeframes, the trader types, and combined with the time frame. So a scalper is on a minutes, hourly time frame. They check the price like every 1 to 15 minutes. So they check it a lot. No free time, lots of stress. Day traders are on the hourly and 4 hour. They check the price every like 60 minutes or so. Swing traders are trading the hourly and daily, and they check charts around every 4 hours. And position traders are on the daily and weekly time frame, and they check their position like daily or sometimes in a few days. So now you know the whole trader recipe. So you need to be a little bit of a fundamental trader, focusing on news and macroeconomic conditions. You need to be a technical trader, a little bit of technicals. In your technicals, you need to find a trading language. You could do support and resistance, supply and demand, ICT. Just choose the one that resonates the most with you. And then you need to choose your time frame. Are you a scalper with no free time, lots of stress, but high risk and reward? Are you a day trader? Are you a swing trader? Are you a position trader? And choose that for yourself. And then it's the question, what now? You've watched all the 9 parts. You started with candlesticks, then you've seen time frames, then you knew what to trade, what pairs. You went through the trading view tutorial, then you knew what market structure was, how to trade indices, you know everything about leverage, about brokers and prop firms, and now you even have your own trading identity. What now is watch the final part of the beginner bootcamp to introduce yourself to the first language, ICT. Then go back to your notes and check if you are familiar with all the concepts from the previous parts of the bootcamp. If not, just go watch it again, take notes, and most importantly, implement the knowledge. Don't use it as a Netflix, focus on actually implementing the knowledge. And then choose your language and your trade type. So for example, an ICT language, day trader, time frame type, and start developing your trading career step by step. Thank you for watching this video. In this video, we went over the trading recipe and everything you need to know to develop your own trading identity. If you like this kind of videos, please like and subscribe, share with all your trading friends, and I'll see you in the next one.